Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we got a video lined up for Thursday, July 24th, 2008. But I'd like to say in that last video, we discussed the concept about your analysis. And in that concept, I said, keep your analysis simple. K-I-S-S. I pointed to the board. And then I said I wanted to show you some techniques that were really simple, that can show us which way the market's going to go. Keeping it simple, I put some charts in front of you. I believe it was the S&P Cash, the Dow Jones Industrial Average, and then the Emini Russell. And I put those charts up for you. And I said, take a look at these V formations and specific dates that they happened on. Basically, it was when we had bad news from Societe Generale. Then we had bad news about Bear Stearns. Then we had bad news about the bailout of Freddie and Fannie. And something happened in the markets on those days. I pointed that out to you, were these V formations. I would like for you, if you don't mind, to indulge me now. I want to show you a quick flashback from the 21st or Sunday evening when I made the video and pointed out these formations for you. So if you don't mind, take a look at the three charts I'm going to show you, which are a flashback. Then I'll come back and show you the charts as they look today. So take a look, traders. I'll be right back to you. Okay, traders, you are looking at the S&P Cash Daily Bar. If you look at the illustrations on this chart, you can see that after a substantial down move, a little V formation gets put in place, which produces a rally and another drop. And then a V formation gets put in place here, which produces a rally, and finally another drop, which gives us another V formation. The rally was a little greater on this, and then the drop and another V formation, which we are in now. Interestingly enough, this one is Societe Generale's Rogue Trader. This one happens to be Bear Stearns bailout. And this one happens to be Freddie and Fannie. Wow. After each one of those big pieces of news hit, we put in a little V formation and rallied out for a little while. Again, don't fall in love with the upside. Okay, traders, now you're looking at the Dow Jones Industrial Average Cash chart. And once again, the illustrations are pretty clear. They're cut and dry. After a nice drop, you seem to get the V formation, little rally. Again, once again, Societe Generale, then Bear Stearns, and now we have Freddie and Fannie. Okay, traders, once again, now you're looking at the E-mini Russell and the small caps doing the same thing as the large caps. I wanted to make sure that you've seen it's not just the largest cap trades. Look, you have that little V formation here. Then you get the other one here, you get another one here, and here we are in the throes of one right now, including breaking out of the resistance line. So the E-mini Russell is pointing towards the upside with this little V formation that you keep seeing over and over. Remember, traders, I already gave you the dates, disaster date, disaster date, disaster date, and from there you seem to get little rallies. Okay, traders, so you just seen that flashback from Sunday night last week or the beginning of this week. Now, let's go take a look at what the charts look like at this moment in time, now that a little time has been marked and we've gone through most of this week. Let's look at the charts, traders. Okay, traders, just as in the flashback, the first chart you're looking at is the S&P Cash Daily Bar. And as you can see again, this was Societe Generale, and then this one was Bear Stearns. And look what's happening now. When we talked about this, none of these bars here existed. And it is this whole week worked its way up inside that V formation. So, boom, keeping it simple, gave you direction. In fact, we called the market to get up into the 1290s. And lo and behold, we traded 1291 and change on Wednesday. So that absolutely was working and is working and looks like there is more coming. Let's look at the next chart now. Okay, traders, as in that flashback, now we're looking at the Dow Jones Cash Daily Bar. And of course, the three V formations. There's even two more if you look back here. But the three disaster dates, 1, 2, and now 3. And look at the way we're climbing out of this. Very nice, traders. That is keeping it simple. I will admit this has been a difficult week for trading and last week as well. But it is doing what we thought it should do based on what it's done in the past after bad news has come out and we had a nice drop. I'm not falling in love with the upside here by any means, but a little more of a run-up is probably expected here after looking at that. Let's look at one more chart. Okay, traders, as I pointed out, even the small cap stocks were taking part to this, and look at this V shape and the run-up, this V shape and the run-up, and look at this V shape here, and look at how high we've run already. Look at that. That's a nice run. Granted, it's not at the 200 bar average, which stopped the market cold last time it got to it. So I'm not falling in love with the upside no matter what these formations look like. But a bounce is a bounce, and you're going to get them from time to time. So keeping it simple provided us with the technical analysis to know that we would trade at least into the 1290s in the S&P and probably higher before the week is out. So you've seen the charts, traders. That was a pretty simple technique. Now, I am the first one to admit trading the analysis that you've come up with is an entirely different story and is not easy and, of course, is risky on top of everything else. And I will be the first one to admit this. I traded that move very poorly this week because my indicators, which I have been able to rely on without question for the whole first part of this year, have been conflicting like crazy. They're cloudy. And it's been tough for me to make the call to get in and get long because the indicators were not pointing in that direction. In fact, some weren't, a total mixed bag. That happens from time to time throughout the trading year, and that happens often when the markets are getting ready to make a trading turn. So that variable where my analysis suddenly is fuzzy, last time that happened, we were at the top of this market, and I did videos and mentioned the analysis is really fuzzy. This doesn't usually happen, blah, blah, blah. And it turned out that we called for the top of the market, and that's what happened. Now, traders, I am not getting bullish. You know don't fall in love with the upside on the board. However, the analysis is fuzzy. It's been lasting almost 2 weeks. This thing's starting to rally. Something is happening here. We will play it as we've been playing it all along, waiting for the opportunity to get short, but we have no choice at this point from what we see to buy into this move. So again, I didn't trade the first part of this move correctly, but you know I'm in tune with these markets and I will catch up to it. Again, the indicators are now beginning to come into focus, which, wow, I was really pleased tonight when I looked at my indicators. I said, well, look at that. Finally, after almost 2 weeks of turmoil, they're getting into focus. And I think you analysts out there, if you look at your indicators tonight and compare them to the last 2 weeks, I think you'll find the same thing. So stay alert because your indicators are starting to catch up to the markets now. I know I look at all the indicators, or at least I look at many, many indicators. And if I'm seeing that, it's probably happening to you. So take a look. Now, for the 24th on Thursday, we are looking to we are looking to get long the NASDAQs on a green Omni. Yeah, right, green Omnis. We like the green Omnis. I will admit, a little bit of a heart attack going on here. You know, I keep my emotions out, but the call green Omni in a bear market is something I hate doing. But once again, the analysis speaks for me. I follow the analysis. The analysis gave us these pretty charts I just showed you, and that worked. Now the indicators are starting to point in that same direction. So again, they've caught up in a race for indicators. Finally, this has been a tough 7 to 9 trading days. So hey, let's see what we get. So for the NASDAQ, the Emini NASDAQ tomorrow, the Omni says to buy in basically the high to mid 1840s. Right now, I have low to mid 1840s on the board, but you know what? It's more like the high to mid 1840s from what I can see. So you want to buy your NASDAQ on a pullback into the high to mid 1840s. Omni's profit objective, we will talk about as the market develops and the market starts collecting data. We will develop a target for you and tell you at the site. For now, we do expect a run somewhere into the 1890s, and on the way up, resistance is expected at 1878. Traders, always be out by the close. Always try to use MIT orders, market if touched orders. And always, always place your stops first, because it is no joke if you get yourself into the NASDAQ or the S&P and you don't have a stop in it, some news comes out and that thing plummets $50 on you. You know the pain, and you know that does happen. It is a risky business we're in. Put your stops in, put them in first. Never trade these markets without one. But if you are brave enough to trade and you put your stops in. Get long in the 1840s for the NASDAQ, and look for possible 1890s with some static in the mid to high 1878 area. 1870s, somewhere up there. So put your orders in, traders. We are trading at about 1854, 53 as I speak. A pullback is all we'll need to maybe react and get in these markets. All right, traders, again, I will say it. We're in a rally, but if you look at my website right now and you take a look at the chart on the Daily Omni recommendation, the site's www.livewithoscar.com. You look at the chart that I have presented on that recommendation. Below each rec is a chart. That chart clearly defines the head and shoulders that we are mired in, which is a bearish move altogether, and we're moving up inside that channel, so don't fall in love with the upside. We are working on the right shoulder. So I'm not a bull here, but I'm bullish for tomorrow as a day trader. All right, traders, enough of that. Make sure you're careful out there and always do your own homework. Give me a call anytime, day or night, 702-629-4755. And as always, please keep those charts and that email coming in. I love receiving your emails and your homework. I like to see what you're doing, how you're drawing up charts. So if you do that, shoot me out some charts to Oscar@futuresanalysts.com, and I'll be more than happy to review those charts and shoot you back my reply. Gentlemen, anything else? Oh, yes. Before you even answer, I got something. I may not be working on Friday. I'm going to try my best to actually take the full day off because I got to fly home and pick up my children, and they've been on vacation for a month, and it's time to go get them. So I'm going to be in flight Thursday night into Friday. I don't know if I will be able to do a video for you, but I will be watching the markets as always, and I'll keep my eye on the chat rooms. So you may or may not see me Friday. Maybe a little peekaboo on Friday. We'll see what happens. All right, traders, don't forget to keep your emotions out of trading. And one of the best ways I can help you with that is to say this to yourselves every day. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.